in as we continue watching this sell-off, everyone. We get a market that's off 508 points right there on the Dow Jones Industrial Average. So what do? Do you get in right now, or do you sit by the sidelines and see how this all shakes out? Well, here are some answers. Joining me right now on set, hedge fund manager, the author of the brand new novel, Make Me Even, and I'll Never Gamble Again, Mr. Jerry Fine. Good to have you here.
Thanks for inviting me.
What are you making of this market?
Well, I think we've seen the highs for a while. I think the easy money's been made, but that doesn't mean the market has to go down a lot. It doesn't mean you have to sell everything. Sometimes the market is overvalued for long periods of time. Sometimes it's undervalued. I think we're at a very interesting juncture right now. For the time being, the last couple of years, you've been just coasting down the river, enjoying it, and making money very easily, low interest rates, strong economy, favorable government actions. And now the river has gotten very rough, and there's maybe whitecaps in the river, and it's hard to see what's going on underneath the surface, what's lurking beneath. I think there are two big rocks you have to avoid. One we've been talking a lot about the last couple of days, which is interest rates. They're up a lot recently. Maybe they'll stall out here for a while. I don't know. But I think there's a chance of a collision between the Treasury and the Fed. If the Fed wants to keep raising short-term rates near term, wants to pull liquidity out of the market by lowering its own balance sheet, at the same time the Treasury has to do something with this incredible deficit. I see a chance of a collision there unless there are new buyers for Treasuries. I think the market.
So walk me through that. Collision meaning higher interest rates, and therefore we're paying more interest on the debt, et cetera?
That's exactly right.
Okay.
And that affects stocks. It affects certain companies, obviously housing and autos, but also could affect the valuation of stocks. I think people are starting to realize this now, and that's what we're seeing in the market.
So what do you do, though, if you're Jay Powell? I mean, would you say it's inappropriate to be raising, he hasn't been that aggressive, and the economy is doing well, so wouldn't you want to raise, yet you get the headwinds of the Treasury yield?
I think he's doing the right thing. And so far, the economy's strong. I think if he sees any sign of diminution, he'll probably react. But right now, he's going to take it up, and interest rates are still historically low, and it's still very stimulative.
Sure.
I think the bigger risk, the bigger rock under the water, is where we're doing with China. And I think that's the problem is it's so unpredictable. If they've abused us for years, they've lied, they cheated. I think we all know that. And now we're going to do something about it. The question is, if we're just positioning ourselves with threats, which back and forth, which I think is going to happen for a while, if we actually morph into an escalation and it's an actual trade war, that would change our policy at my place. Then we'd be selling our stocks, and we've been short bonds. We would be covering our bonds. I think people would run to bonds.
You don't believe it's at that level, though?
Absolutely
at this
not.
Point, is it posturing?
I think so for the time being, but I'm nervous about it because it's not something I have expertise. Exactly, and I can't see what's underneath. I'd like to know what's underneath the water, and right now I'm not sure I do.
Fundamentals, though, Jerry, they've been coming in pretty strong, pretty good. Wages increasing at roughly 3% on an annualized basis. We'd like more, but not bad. GDP growth, pretty darn strong, upwards of 4%. You get unemployment at the lowest level it's been at since, you got to go all the way back to 1969. So isn't that the foundation you like? Absolutely.
But I think that we've discounted a lot of it, and that's why I said I think the easy money, there's always difficult money to be made, and that's my job. But the easy money's been made, where, as I said, you can just sit in your boat and just float down the river and enjoy it. We're not there now. We're up an awful lot, Trish.
That's true.
We're up an awful lot, and interest rates are higher. And there's something else that concerns me a wee bit. I hesitate to almost talk about it, which is inflation. The CPI is running about 2%. The Treasury, the Fed says inflation's about 2%. But we spend our time talking to companies and reading transcripts of conferences and reading transcripts of conference calls where they're answering questions. And big companies, we don't own these stocks, but Illinois Tool, Caterpillar, Walmart, those kind of companies, they don't say inflation is 2%. They say it's quite a bit higher than that. And they don't say employment costs are 2.8%. They think it's higher than that. I think we run the risk of a couple of glitches there, which could shake up the market. And if the market were lower, that'd be different. But right now, I'm not saying I'm bearish. I just think the easy money has been made. That's my message. And therefore, you should be cautious. And you should definitely not have leverage here. Definitely not, because of the uncertainties. If you want to buy something, which I'm not opposed to, we bought something just the other day, you have to really feel like you know it well, and you have to love your entry price. That's where I stand.
Wow, wow. Now, it's an interesting way of putting it, really, that the easy money has been made, and now it's time to really put the thinking cap on and understand what it is you're buying and why you're buying it, because it could be rougher road, quite literally, with the white caps, et cetera, ahead. Debt levels. You know, we were just talking to Gary Kaltbaum, a Fox Business contributor. He's very worried about the $21.6 trillion in debt that we have. And it sounds like that's a concern of yours as well, as you talk about this potential collision between the Fed and Treasuries. How serious in the sort of scheme of things is that on your radar? I mean, how worried are you? And can we grow our way out of this? I mean, if we keep printing upwards of 4% in GDP.
The problem is we have been growing nicely in the last couple of years, and the debt level has gone up a lot, the tax cut, and possibly now some kind of infrastructure plan. And so the debt has gone up, and the debt liability has gone up for our government, and they have to pay it. And the only way to pay it is to sell more treasuries. And if the Fed is pulling back, we need some new buyers. Now, if the rates go up enough, people will sell some stocks and buy, or they'll go out of short term and maybe buy some longer term. But it's all reflective in where the prices are at the time. And I think we're in a flux. I think we're in a very, very interesting juncture in the markets. That doesn't make me negative necessarily, but it makes me cautious and makes me want to think hard. And this is what we get paid for. There's nothing wrong with it. It shouldn't be easy. It's not supposed to be easy, okay? It just isn't. It's been too easy, and everyone is, pounding their chest and saying how good they are. Now we find out. Now we find out.
Indeed. So I got to ask you about your book. What's a famous investor like yourself writing, as I understand, is a fiction novel?
Yes, it's a coming-of-age novel.
Tell me about it.
I've wanted a new challenge for some time, and I've wanted to write a book, and I emphatically did not want it to be the Jerry Fine story, and I didn't want it to be one of those pound my chest, look what I've accomplished stories. So I wanted it to be a novel, and when this character came to me, and I'm not sure how it happened, but he did, and I started thinking about how complex he was and how interesting he was, and if I placed him in the decade of the 70s and 80s, there was so much turmoil, socially and economically. We had a 50% correction in the market, 50 in 73-4.
Think about that.
Yeah, and I could, because I lived through it, and because I made it a work of fiction, I could add a lot of character to it. I could bring in new characters. I could put him in different situations and add color and hopefully perception to it. And very exciting for me. Very exciting. Very difficult to do, by the way.
Sure.
Very difficult. Looking at blank pages is difficult.
I know. I've written myself a book, but it was based on some reporting. I think fiction is a whole other thing.
Right.
A whole other challenge. So congrats to you, Jerry.
Well, thank you very much.